Hey, I'm Al Cornell. Thanks very much for joining me. We are in Vancouver, British Columbia right now. We consider this to be the mining capital of the world in terms of where some of the more successful publicly traded mining companies are headquartered. I'm chatting right now with an old friend, golfing buddy, client, etc., Bruce Bragagnolo. Bruce is the chairman of a company called Timmins Gold Corp. We were actually on the property about 18 months ago, shot a very good video down there, so if you want to get an idea of what the San Francisco mine, their producer, is actually like, take a look at that video. But chatting right now with Bruce Bragagnolo. Bruce is, as I mentioned, the Chief Executive Officer of Timmins Gold. Let's start out, Bruce, if you don't mind. Give our viewers an overview of what Timmins is all about, and then let's talk about the production rates, the revenues, etc.
Sure, thanks, Al. Well, what Timmins is all about is a company that's always been focused on production. We went public in 2006, and since 2006, it took us 3 years to build the mine, and right now we're ramping up to full production. So within 4 years, we're in full production, and that's always been our goal.
And the production rate right now, if I'm not mistaken, is somewhere around...
Well, the production rate is ramping up. It's an open pit heap leach operation. We started out in April with 2,600 ounces approximately, and then 3,600 approximately in May, and we're ramping up. And by December, we anticipate pouring and selling 9,000 ounces of gold a month, and that's going to carry forward into 2011.
That's a pretty big number. I mean, that puts you significantly above what I would call an intermediate producer. Yeah, that's over 100,000 ounces a year. And that's a good number, but you're going to be growing even more, if I'm not mistaken, on top of that, because the size of the asset, based on the drilling that you've done, the size of the asset continues to grow.
Yeah, one of the things that first attracted us to the San Francisco project was, despite the fact there was an existing resource of approximately 800,000 ounces when we first started, there was vast potential along strike and in the region. Northern Sonora, Mexico is a prolific open pit heap leach style deposit. It lends itself to that type of mining and production, and there's potential along strike and on satellite deposits in our 42,000 hectare claim block. So we feel there's a lot of potential to both expand the resource right around the pit, along strike, and also to find satellite deposits.
One of the things that I find to be particularly intriguing about the San Francisco mine and where it's located, just a little bit north of Hermosillo, just a little bit south of Magdalena, is the environment from a political standpoint and from, let's say, a social standpoint. The environment couldn't be more positive. Mining is incredibly important to that area, and consequently you get a tremendous amount, I saw anyway, a tremendous amount of not only local support, but you also get an awful lot of support from the federal government and the state government, because they realize what a boon to the economy the San Francisco mine is providing.
Yeah, Mexico is ranked as one of the top mining jurisdictions in the world, and Northern Sonora State is also an excellent mining jurisdiction. One advantage there is the land where we are is very flat. We have a lot of land to move around in. The heap leach pads are on flat land. It keeps the construction costs down. And socially, we provide cash jobs to and high-paying jobs to communities that probably wouldn't have that type of a cash flow if it wasn't for the mine.
Yeah, no, I mean, it's obviously it's a real win-win situation it's a win for the company, obviously, because you're getting some good numbers out of there in terms of revenue, and it's obviously, as you know, not to beat a dead horse here, but it's a real win for the folks who live in that area, and that's important. That's how things like mines, continue to exist successfully. What in terms of the growth of the asset, Bruce? Give us just some thoughts on that, would you?
Well, it's a function of time and money.
Yeah.
We've been adding ounces, and historically the ounces were added for around $10 per ounce. So the real goal of the production is to get the cash flows going, so we can use our cash to drill, and that's our goal for this year and also next year. Next year we'll see an extensive drill program at San Francisco. We're drilling a fair amount of meters this year, and we've already added ounces to the resource. The next step is to get that into the mine plan and build a reserve. But after that, next year we'll see extensive drilling and growth, and it'll all be funded from cash flow.
The thing that I find really intriguing about your particular situation is your cash cost is just a skosh over $400 an ounce, if I'm not mistaken, $420 specifically, I think. And gold right now is trading north of $1,250 an ounce. Indications from all the folks I talk with on opinions, I guess is a better word to use, from all the folks that I talk with on the radio constantly, everybody has pretty much come to the conclusion that the price of gold certainly isn't going to go down in the foreseeable future, and the general consensus is the price of gold is going to continue to go up. What's that going to do to your revenues? The obvious.
Well,
I mean, your bottom line, your profit, it's going to do the obvious. You'll make more money.
Yeah, there's two things to say about that. First thing is, as long as the price of gold is double our cash cost, so if gold is even at $850 an ounce, we're still making very good money at the mine. But we don't think it's going to be $850. We think it's going to $12. It's going to stay over $12.50 and go higher.
Right.
So every dollar that gold goes higher means $1 of profit for the company, and that's the beauty of gold mining.
Yeah, no, it really is. It's an interesting business. You know, just on a kind of on a personal note, Bruce grew up in Timmins, Ontario, a mining town. So you're no stranger to the mining industry. I mean, you are an attorney. We're a practicing attorney now. Now, obviously, you're a full-time mining executive, but you really kind of grew up and cut your teeth in this business.
Oh yeah, everybody in Timmins, all the students worked in the mines during the summer.
Yeah,
that's how we put ourselves through school.
So what's going on in terms of current exploration?
Well, on the exploration front, Al, we drilled a hole 500 meters to the south of the existing pit, and we hit a hole there of 21 meters of 1.2 grams. So we're very encouraged by the exploration to the south of the pit, which now looks like the zone is about 1.5 kilometers across. So there's a lot of potential along a corridor of about 1.5 kilometers, and extends. We don't know how far it extends because we've only drilled up to 2 kilometers away. So we've got a 2 kilometer by 1.5 kilometer kill zone that we're really focusing on.
Now you are going to be updating your 43101 numbers, correct?
That's right. We've got the new mine plan being prepared, and we're also going to put out a reserve calculation as soon as we can get that ready.
Interesting. You know, don't construe this as being investment advice, because it isn't. I'm not a registered investment advisor, and neither is my friend Bruce. But, you know, Al and my wife Kathy, bought shares in Timmins out of the market. The reason we did it is because we really, really believe in this company. So, you've got to know, as Bob Moriarty says, you have to know that I am highly biased because we put our own money into this deal. If you want to get more information on Timmins, a couple of suggestions. Number one, there's a banner on Timmins Gold on our website. You can click on that, or you can certainly call the company and chat with the personnel there, and they would love to answer any questions that you might have. Bruce, thank you so much, buddy.
Thanks, Al.